Good morning and welcome back to the Opportunistic Trader for January 2, a Tuesday. Had a nice day off yesterday, even though markets traded around the world. It was slightly quiet. Markets were down a bit, but overseas action took us down a bit more. China and Japan Japan was down a little bit more, but 1% to 2% across the board, and the DAX is the outlier. It's down 30 basis points, holding up unbelievable this year, but last year it melted 18 or 20%. So it's up about 10% for the year, came back half the move. We've come back pretty much all of the move. I think the year before we started at 2670. If you take out today's loss, we were basically unchanged for about 13 months. Up, down, sideways, backward, and all over the place, but somehow always coming back. I was listening to Ray Dalio this morning a little bit, and I kind of agree with his views. Market will see a recession. I think it'll be earlier than he's thinking, but overall, growth is slowing. Bonds have already given that away. The 10-year is like 270, down from 3.25. The yield curve is pretty much inverted, on the tight side, for sure, 2s to 10s, and inverted in the middle of that curve. Obviously, it meant something for about a day when they were talking about it, but they kind of went away from that. So the first big down move on inversion, they'll be all over that. Overall, dollar is still in the same place, a bit stronger in general, but nothing to speak of. Oil is down $1. Still looks strong. Maybe get a little bit more mean reversion back in here and then a leg higher. The S&P is down 17 and NASDAQ is down 50. But really the takeaway today is the price of the straddles again for the day. And that leads me to the point of being a little bit disheartened. The straddle is $12.50, which is even lower than where it was on Friday. So they're not expecting much of a move or any move at all today. There's not really a lot to look at. Stocks are down in line. There's no real outliers in general out there that I'm looking at to make me believe there's going to be a move outside of that today. Again, bonds are the ones that are really giving it away. I mean, they just keep rallying and rallying, and at some point it's going to become very interesting because the numbers with the government shutdown, if we ever get numbers, when they come back out, are going to be really, really awful. So it'll be interesting when and if we see those numbers. And I guess this is like day 30. I'm joined by Vince and Mike. Vince, you want to give me your thoughts? I'd appreciate that.
Sure. Good morning, Mike. Good morning, Larry. It's good to be back, first of all. Second of all, to your comments, corroborating and consistent with that, the IMF yesterday released a report revising GDP, global GDP, lower again. So with the absence of news or volatile news, in the absence of any events, as we're all feeling right now because the market's kind of a little choppy sideways, what we are seeing is a market that's taking its cues from what little news it has to grasp on. And so global equities are lower. So it's a risk-off bias on top of all the stuff that's chronically still out there that nobody has really focused on, but not to belabor it too much, just to say this. GDP broadcast globally as being predicted lower by the IMF means dollar strength. And although it only looks mildly strong, I would say this, that's because the dollar, the DXY, and it is mildly strong, period. It's not that strong looking, but the DXY is predominantly euro and yen. And the dollar is stronger against the emerging market currencies today, which is reflected in Larry's comment about Asia and emerging market stock markets being lower. But the dollar is not stronger against the yen today. I don't want to make too big of a deal of this. It's more of a comment on Japan's own domestic issues, that being that their stock market sold off because they need to lower rates. I don't know how they can do that, but their currency was stronger today because their inflation numbers have been lower. So that's why the yen is bucking the trend. In fact, that's why if you want to look at gold as a proxy for the dollar, even though the dollar is up a little bit, gold is up a little bit. And so you can't make too much of the things like that on days like today. Active traders like myself, and I would think people who trade looking at the tape a lot, want to trade. It's tough to sit on your hands in days like today. But what could be a trend could also be noise. And the straddle, I think, that Larry makes a point of pointing out reflects probably the best handicap of activity range wise for the day. I hope that adds a little color to what you were saying, Larry.
Yeah, it for sure. And you know, for us, a day like today, and again, it's a back in the swing kind of thing because everybody had a day off yesterday, but it's really not looking good when your straddle is $12.70 bid. Doesn't look like much of a move. It's less than 0.5%. We're already down 67 basis points. So basically, they're saying on the downside, you're not going to see an extension. And on the upside, you're not going to go positive on the day. So those are the bets that the straddle is making. Again, it's a little shocking after what we saw for 2.5 months that in now up to almost 3 weeks of trading, it's taken the full volatility out, but you have to respect it. And most times the straddle's all right. So we're thinking that could be the case today, but overall, not a lot of movement. Everything is sort of
a lot of catalysts because there is no economic data really with the government shutdown. So we got, like as mentioned, IMF downgraded growth. Still are debating how important the government shutdown is. There are a lot of China growth yesterday by global day. Tariffs, a lot of uncertainty, data, not much attitude.
well, they could ride the train of fake news all the way to the station. They,
Right.
they got us up on China trade talks, 5%, and there were no talks. So any headline, any fake news, anything could move the market. But other than that, you're right. There's not a lot out there. Market looks a little bit heavy. It's completely overbought. It's probably the most overbought we've been, coming from the most oversold we've been. But that's the algorithmic market that we're in. It's a market that goes much higher than where it should, and it goes much lower than it should. So it creates opportunity, but you have to stay small and be able to withstand the moves. But overall, Asia's much weaker than us today. They're down 1.5% to 2%, and we're down 0.5%. So we'll see where the day ends up.
If I can just throw this in there, you said something, and I had numbers and on the ES, but the way you're phrasing things and the lessons of my own active trend, as you know, for the most part, I trade trend, and I came into today about to say below 26.53 spot 64, we're probably going to get a sell signal lower. Now, listening to my own words, which were an echo of your thoughts and words that you said, yeah, I have a sell signal today below 26.53.64 as a reversal of trend. But guess what? Today is a noisy day, meaning it could be any move could be more noise than anything else. I would be remiss to use that signal aggressively. So normally what would be a number, a 4 on a scale of confidence, because of things like the straddle and the lack of news, I would put it as a 1. And in fact, that number is still valid, 26.53 spot 64. But instead of me saying, hey, I should get short below that, it might be just wise to say, hey, if I'm long, which I'm not, I would be wise to look at that as a potential level to exit. But certainly my numbers today are more I look at with a skewed eye because we are flat. Doesn't mean we can't have a 50 handle move, but it won't be continuous and smooth like we like to trade. The point is, any good levels that I have today are good, but the market is telling you to not trade heavily or to use them as levels of advisement, not levels of action. So that's my 2 cents on my own 2 cents.
So you're saying you don't really have a level today in the S&P that you're looking at?
No, I have a level. I have a level, but this is in a system that I have. The system that I use today is a day where I would not be too surprised to get chopped out. So the last time I had a level in the ES like this, I caught a nice sell-off. It's the regression version of the trend model, and basically it's the inversion of it. And it says below 2653 spot 64 on a daily basis, that negates the trend. Now I'm not even talking. We're not talking technicals. It's a momentum number. It's a negation of momentum higher. But guess what? On a thinly traded market or a market without a lot of news, I will probably get stopped out. And that's why, the system that I do use, I will get chopped up a lot because I will trade sideways markets like this automatically because I'm risking one to make two. But I would say that the probability of being stopped out on a signal today is very high. But I will consider selling the market below 2653 spot 64. But it's not an intraday trade. It will be like a 1 to 3 day hold. And I guess the stop out level will probably be new highs on the daily, recent daily, which would put us at about 2677. It's 25 handles, 24 handles, not something that I usually do. So I'm gonna say that that's a good level to get at if I'm long. It's certainly not a reliable level to get short today, but it's a number I'm going to watch.
Okay. What do you make of natural gas? I mean, this thing moves. I wish the equities traded a quarter as good as natural gas. This thing is.
Natural gas it's boring, Larry. Who trades natural gas? I'm just kidding.
It is
But in all
unbelievable. It
seriousness,
moves 10% every day.
as a person, yeah, I traded natural gas from 1999 to 2015, and I caught the best of times and the worst of times. And although I can poo-poo this move as though this is a small best of times, it certainly is killing a lot of people. And I think, I think to understand the problem with the market is to understand this. I mean, the spike we had up. Okay, that was, and I'm going to give a hat tip to Bryn and Mike Korn, to Bryn Kelly and Mike Korn, because as I know from what little physical understanding I have of the market, I was a big options guy in it. The spot market can be backward dated for a long period of time before the futures react, and that's because it is such a weather-based market, and that's because it is such a just-in-time, on-demand market, et cetera, et cetera. The futures, it's like electricity. How do you really store it? And it's a pipeline product. And Henry Hub, ignored Henry Hub futures ignored spot for a long time, and then you had your blow-off rally almost to $5. And now, to your point, on a weekly basis, we just gapped higher and went up to almost 380. And now we're back lower. I think if I were trading options on this, looking at
you got down to 280 something on the downside after being $5.
Right. So 4 weeks ago it was as low as 285 or something, and then it went up to 380. And I would never call natural gas a dead cat, but this is a dead cat bounce going into the winter. I'm curious if you're actively trading it. Natural gas is a great market to actively trade if you're disciplined. It's hard to trade intuitively because you're only trading one product. You can't correlate it with oil, although some people try. Like, you can correlate the ES, you can correlate the S&P with bonds and VIX. You have other indicators, but natural gas is about weather and it's about demand. It's a demand side product in the wintertime. You can't look at the summer strip as an example of how March is going to trade. You can't look at the winter strip as a reason to buy the summer strip. It's an active trader's spot month market, and it can be very rewarding. You just can't get married to any position because it does make widows and widowers of us. Do I have levels in it? Is that something is that a rhetorical question worth answering?
Sure.
Whoa, I do. I actually do. I just got a breakdown in it. just for the day, that you should be short below 325. That's it. And if we get above 335.5, consider being long. So I'm not playing it today, but below 325, you can be short, risking what, 8 cents to make 16 cents. That would be the play. It's a nice little. I mean, it plays beautifully on the chart. It just the question is, what month are you trading? Are you trading the active month, or are you trading the deferred month? You know, with every month in natural gas in and of itself is a commodity. The spreads are as volatile as any regular market. But yeah, I'm inclined to be bearish. I am bearish below 325. I have no skin in this trade. But yeah, short below 325, looking for 16 cents, looking for 2 times what you're risking, depending where your entry is, probably not a bad trade today.
Any sectors or anything you're
Always looking at the banks, always looking at energy. Both are down about 70 basis points on the index side. Obviously, looking at technology. Market's dead quiet. Straddle's dead. Actually coming in even more. So I don't know where it could possibly go. It could go to zero at the end of the day, but again, that's a long time. So, with the market down 18 handles and being so calm, and literally since we've been on the air for 20 minutes hasn't moved 50 cents is pretty shocking to me. So I think people are sitting long. Dalio said it as well. Everybody's long. Just a matter of how it plays out from here. But everybody is inherently long and hoping the market continues. Stocks are so far off the lows that nobody sold, but anybody that was thinking of selling is never going to sell. Like, why would you sell Facebook at 149 when it was 123? You would never make a sale because you've already taken the most heat you could take. Apple, same thing. 141 is trading 155. Goldman Sachs traded 149 or 150. It's 200. These stocks are so far off the low that nobody, and I mean nobody, has to make a sale. Micron traded 28. It's 35. I can go through a list of these, and every one of them is the same. So why would anybody need or have to make a sale when you've already seen the ultimate pain and never made a sale there? So that's the market we're in. The same people that are never selling are never selling, and then now they don't have to because their portfolio is at least 10 to 20% higher than it was 3 weeks ago or 2 weeks ago when we made the low. So why would anybody need to sell? That's the market we're in.
Can I interject something that's absolutely
Sure.
spot on to what you're saying? This is what I'm hearing Larry saying, and I say I'm speaking to the active traders out there. When you're an investor, and by investor I mean someone who's holding it anywhere from 1 year to 20 years, and the market goes as low as it has, and then it comes off the lows, you're not going to sell. You are, and I want you to think of this. I want you to take your active mentality, your active trading mentality, and think like an investor. What happens when you're long a stock and it goes down and it just misses your stop to get out, and then the market bounces $1 or $2 or %? You go, what do? You breathe a sigh of relief. You go to the bathroom, you get a drink of water. You're chilling because you're like, hey, it didn't hit my stop. I'm more comfortable now. Now think of an investor as the same way. They may not be thinking in terms of stops like you and I and Larry and Mike are, but they are thinking in terms of stress and relief. And when the market's making these lows that Larry was describing, if you didn't sell then, you ain't selling $10 higher. The only people selling and I'm not saying no one is selling $10 higher, but the people who are selling $10 higher are people who shouldn't have been long in the first place. They have to make a mortgage payment or something. But institutional investors.
I'm saying that nobody is selling.
Okay. But
nobody.
I'm saying institutional investors. Well, yeah, certainly
Traders are selling. Hedge fund guys might have had to sell, but any investor, like
Right.
A millennial, like my kids, they're not selling. They don't care. They got funds that were down 40 and 50% last year. They're not selling. They're not selling. They're never selling. So that's the market that we have. We have a market that you have a group of people, and you've seen it in Bitcoin, and Bitcoin keeps going lower and lower and lower. Although it's like basing here, or hoping to base
Talk about
here.
volatility.
But that being said, no one is selling. They're hoping and praying, and in Bitcoin they may not get the bailout, but
But
in stocks they always get the bailout.
the
So
takeaway I'm trying to give active traders is that investors have the same mentality as active traders on a longer term basis. When your stop isn't hit as an active trader, you breathe a sigh of relief, and there's no way you're selling $10 higher. An investor, even more so, is breathing a sigh of relief, and they're not going to sell $10 higher. So I'm agreeing with you. Today, Johnson and Johnson and IBM have earnings. If you are an active trader in stocks, I don't know how you play going into earnings. Someone like Tom McEntee does that, and I think we're going to be talking about that on the option show at 2 o'clock. But Larry, I want to ask you something. In a day where there's not a lot of news, right, and we still have all this chronic, stuff out there, and a market that is generally overbought. I see your point there. Uh, do you do? And I know that there may not be one answer to this, so just feel free to just go off and tell me how you feel about it in general. As a person not as familiar with stocks as you are, when earnings come out on a market that's other in a marketplace that's otherwise light on news, uh, do you think that is there a bias towards it overreacting or underreacting towards news? You know what I mean? I know it can vary from stock to stock, but do you ever
well,
have
I
a bias?
think and this has been the takeaway for me for the last bunch of years, and this has to do with algo trading and all of that. Um, there are times where Apple could be down 15% and the NASDAQ probably won't be higher, but the S&P could be higher. So I think it's hard really for individual names in general to move the market. There are some that maybe an Apple can, but overall, the game has changed. Back in the day, if you had Intel miss, that would really be a market mover. It would move all the chip stocks, it would move technology, and it would move the market. Now Intel could be down 15% on the day, and the S&P could be positive. So I don't see any earnings here being very significant to the overall trade mantra. But again, you just have to be leery. It's
Yeah.
just shocking to me that it's January of 2019 and the markets are dead. I mean, they don't even trade. They're not even
That's
moving. I mean, what's going to happen in July? I mean, there's going to be no. Maybe you know what? Maybe these markets do move better when there is a lack of liquidity. Now the liquidity is tight. Everybody's back, so they can't move the market. But maybe a lot of the end of the year was, no liquidity, people forcing positions and people forcing people out of the market. Now we're back in January. Everyone's around, and the market can't move, and the straddles are offered out.
right,
They're
right,
offered
right.
out.
Well, there's no doubt
You,
that was part of December was, a less liquid time. There was a lot of forced selling possibly for tax reasons. Number of different. Definitely get that.
Yeah, but the volumes were they're triple what they are now. So there was trading and massive liquidity. It was just the market was moving enough for people to enter, make money in day trade. There were people that were having forced liquidation, as you said, and there were people, entering new positions, and the market was moving around 50 handles a day off of that. Now they're telling you right now that we can't even have a 30 handle move on a day,
right.
where
Yeah,
the market looks weak overall.
traders talk about that. I've heard traders. I use the phrase liquidity events, meaning liquidity was drying up, but that created liquidity in the market if you wanted to do something, whether get out or get in. Your point about I think it's an important point. If traders, once upon a time, if Intel rallied, you would look to the sector to rally and maybe even the whole stock market to rally. But I think it's an important change in the market dynamics. To your point, Larry, that uh, individual stocks are reflecting of stock prices, not economy prices. So if the Intel did well on earnings, the whole stock market go up because that could be good for the economy. On the other hand, these days in a market that's dominated increasingly by uh, indexing, right? By algos trading indexes, which is incredibly overpowering herd mentality. Johnson Johnson's earnings could be horrible, and it won't do much to put a dent in the rest of the S&P 500.
Oh, that
So
won't even have an effect on the market in
I
any
know,
way.
but I mean, the point is, you know,
You got to go deep. You got to go to the top 5 stocks to even have a chance to
But
have it be market
that's my
impactful.
point. It used to be the top 50. It used to be a Dow stock moved everything, and now
But
it's
you're in an
not
algo
even.
world now, so they just take that out and they
Right.
figure out what they got to buy, esoteric stuff that no one sees to
Right.
make the market go up enough to cover that Johnson & Johnson down move.
You know,
And-
as
No.
you guys bring up Johnson Johnson, by the way, remember asbestos products. I just pulled. Really haven't found. Tired of it.
Well, there's definitely earnings. There's definitely earnings there coming out today, as there are in IBM. But yeah, like you're saying, Mike, what a blue chip used to matter. Now it's not even a blue chip that matters. It has to be the top 5 of the blue chips if it's going to affect the broader market. And that's to Larry's point. But I brought up Johnson Johnson. Yes, it is random, and yes, it is a.
I was just taking a look at it because it hasn't really recovered since that news.
Well, it's been on Tom's radar. We're
Yeah,
looking.
no, he's
we
been
looked at.
very active in that. Maybe we'll get an update on that today at 2:00. That's you guys. You know, also just following up, you know, so Ray Dalio was talking before Larry mentioned it. You know, a sum of a few things he was talking. He's pessimistic on Europe. He is a little nervous about Asian growth, but definitely on Europe and European banks. And as we come in today, Deutsche Bank is down 3.5%, and it's not because of his comments. It was down before that. But that thing can't get off the ground. That still is a huge downtrend.
Well, I was reading an article over the weekend that SocGen is basically going to go belly up at some point. So I don't know the price on SocGen, but I know it's down 20 to 30% just recently. And I don't even know, you know, how they're going to stay in business is basically what the gist of the article is. So we actually do business with them. So, so it would be interesting to see if, you know, they run into a bit of trouble moving forward. And that's it, really. There's nothing moving. S&P hasn't moved $1 in the last half hour. Literally, it's down 18. We got on the air; it was down 17 and a quarter. So we've moved 75 cents in the last half hour. That's where we're sitting. And other than that, I don't see much really else to talk about. If you guys have any closing thoughts, that would be great. Otherwise, you know, I think it's going to be a quiet trading day across the board. Hoping for some action, but it doesn't look that way. Oil is taking a little bit of a leg lower. Nat gas down 9%, and RBOB is actually up, which I don't know why, but that's up. And overall, everything else is pretty quiet.
Sounds good.
All right, we'll have Vince on with Tommy Mack at 2:00, and then during the day at 10:00, we're going to have the replay of Alec Gerchek, a trader from Russia, trades U.S. equities and Russian equities. So we'll hear from him again, and I wish everybody luck today. It's going to be a quiet one, so let's look for opportunities. We'll be in the chat, and we'll be back to you after the opening. Everybody, good luck.